Hi, what's up YouTube? Quick one. In this video I want to show you five rules or 5 ways, 5 things to do step by step to become profitable or to become successful as a trader. 5 things that you need to just stick to, follow, okay, understand. I won't waste your time. So let's go to my computer screen so that I can show you all these things. Please don't forget to subscribe and like the video. And if you don't want to subscribe, at least try and like the video for the effort put in. Thank you. So let's go to my computer screen.
Okay, so now that we are on my screen, let me start with the first thing that I would like to talk about. The first rule that I want you to the first thing that I want you to pay attention to is always follow trend. And when I say follow trend, I'm not talking about trend on lower time frame. If you look at this is on 4 hour. Okay, if you look at this on 4 hour, and if you look at it, you see there is a trend here. Now I'm not talking about this trend, okay? Either it is on 1 hour, whatever time frame, daily. No, I'm not talking about this trend. I'm talking about trend on monthly time frame. Okay, that's the trend I'm talking about. The trend that you see on monthly time frame should be the trend that you follow. Take a look at it. If you come to monthly time frame, if you look at the trend here, you can see it is what? It is an uptrend. Okay, it is an uptrend. As you can see, a push to the upside, retracement, push to the upside. Probably we're going to have this next year. So now you know for a fact that this is a bullish market because of what you are saying. S&P 500 is a bullish market. If we check Nasdaq, the same thing. If you check gold, the same thing. Similar bullish market. So now that you know that this is a bullish market on higher time frame, you want to consider following that trend on lower time frame. That is, you want to consider buying. So when you understand this, you can then come to maybe daily time frame to better see the recent to better see the recent trend, and then use it to your advantage. So in this case, let me remove this. Let me remove this. Okay, so when you understand the general direction, then you want to consider buying. So all you just have to wait for or look for is retracement and all that. Take for example now, this on lower time frame, a retracement to this zone, for example, a retracement to this zone could be a buy opportunity. Okay, so you may want to do your analysis on daily time frame, your final retracement or something like that, but at the same time you can come to a much lower time frame, your entry time frame. In this case, like now on your entry time frame, just come to your entry time frame. You don't need to come to daily time frame. Just come to a entry time frame and look for a decent retracement. So now in this case now, okay, I bought this market last week. I'm talking to you now. My main account, I still have this open, but for the people that I manage accounts for, I already closed this trade because I don't want to put the account on serious risk. So because of that, I closed the trade. So but my own account, it is still much available. The reason is because of the choppiness of this market. Ordinarily, because this is a bullish market, I expect all the candles to be sharp, some kind of sniper entry, just like this one. If you look at all the ones I've taken in the past, you can see they are always sharp to the upside. Okay, but if you look at this recent one, you see it's very choppy, so it's actually not risky. And my entry time frame, my entry is around here. Okay, so so that's the thing. So the first thing you need to understand is follow the trend. So when you understand the trend, your own is just to look for dip, like a retracement. You want to wait for a dip, like a retracement. After that retracement, you want to take a buy position. If you look at this one now, it was after this push, after the retracement, that is when I look for my buy opportunity and I took the buy position. If you look at this one too, after it pushed up, I also tried to buy here, but that is a long story, so let's leave that aside. So the market push up after this retracement, it's push up again, then there's another retracement. That was when I bought the second not that one. And if you look at this one too, after this push, there was a retracement. It was after that retracement that I bought. So you want to buy after you see a retracement, a dip. That is when you want to buy, because it's a bullish market. This principle is applied to every other asset. So that's my number one rule. So let's move to the second rule. The second rule is understanding fundamental. I have actually talked about the importance of fundamentals in my channel here, but a lot of people brush it off because I don't know, maybe they are too lazy to read or something like that, or they just don't want to they see it to be a complicated thing. But I will tell you that fundamental is important. So let me give you an instance of how important it is to consider fundamental. Okay, so when you open, take for example, you want to trade the S&P 500 and you open this chart, you want to see maybe there are recent information that can be of help. The S&P 500 is on 12 months here as tariff threat in 24, 24, clinical. Now, this is an information about 2025 US stock about Donald Trump's likely policies or something like that, how it will affect the market. So if you read this one now, it will give you a heads up on what to be expecting on 2024, where you should be looking at, where you should be considering taking your trips and all those kind of things. Okay, when there is increase in tariff, there is going to be definitely inflations and all those kind of things. So that is good. Definitely may want to hurt the market somehow. So you may want to consider selling some of these stocks or something like that. So I'm just giving you summary of likely what is likely to be written here. But in a short term, you will see more information. Like take for example, when this market was going on, I had to open all these things both on S&P 500 and Nasdaq and read, and then I understand that it is as a result of the escalation between Russia and Iran that is causing up and down movement when Russia decided to lower their distance. So you want to understand that, so that way you consider, okay, are people scared in the market? Do you also want to stay out of the market? That will give you it will fuel your decision. Okay, so it is important that you pay attention to fundamental. One of the reasons, one of the fundamental is actually one of the reasons why I'm buying this stock now, AMD. Okay, I am actually buying this AMD now. AMD is a tech company. They are also, basically what I'm just trying to say is that based on the information provided, based on based on the development in AI sector and all those kind of things, it is certain, or it is somehow sure that based on the information surrounding this thing, it is possible that stocks in AI sectors are going to perform well, like Nvidia, AMD, Google. Google is actually having some legal issue now. Okay, so I may want to stay away from that. So these are the things. How do I know that Google is? Because I pay attention to fundamental. So it is actually important that you pay attention to fundamental. It's going to really help a lot. So if you read some of this information now, you can see some of this in ARM holding stock as such this year. Analysts say it can keep going. ARM, you can check what that stocks. Global AI governance clinical Alibaba. So Com is an AI stock. It is CEO say investor want proof. So if you read some of these informations like Nvidia, you will see information regarding stocks there. Okay, Nvidia stock looks cheap. Uh, looks cheap to value buyers based on its huge FCF margins. Investor can look ahead to Nvidia treasury body and a bullish finish to the 2024. Is it safe to buy super microcomputer stocks now? So you want to be careful. But whenever you read all these things, you also want to consider your technical structure as well. Like now, despite the fact that I believe that Nvidia may go up, I am a little bit skeptical because I'm seeing some struggling of buyers here, because buyers try to push it to this price, but it retraces, go to the price, it retraces. So something might actually be going on with Nvidia. And based on the information I read last week, Nvidia, based on their report, a lot of investors are not actually happy with the report they came out with, their earnings report. They are so a lot of investors didn't actually get pleased. So I think that hurts the stock. So I expect the stocks to drop a little before the continuation of this bullish movement, and it may get here and then continue. But nevertheless, I just want to tell you that it's actually important that you factor in stocks, okay, when fundamentals when you read. That is the second rule. The third rule is consider price action pattern. Okay, when you read when you open any trade and you want to, when you open any chart and you want to trade, after you've understand your technical analysis, your fundamental analysis, you also want to consider that when you understand your fundamental analysis, you also want to consider technical analysis. So what do I mean by that? Technical, basically I'm talking about the price. So when I was using this as an example, I told you that whenever you want to buy any of these, when you understand the trend and you understand the fundamental, and you've decided that, okay, technically what is not happening. When you see that dip, you want to see price tell you that it's about to reverse. How do you know that there is only one thing that price usually do when it is about to reverse? Okay, when it's about to reverse. So whenever price retraces, price will always give you some kind of struggling. Price will always struggle at a particular zone. So take, for example, you see price come here now, get back, then come back, and then leave a week. So this form give you what we refer to as double bottom. So give you something that looks like double bottom. So that double bottom is something that I use as an entry. So price action pattern. Look at this one too. When the price come back after the dip, what happened? The price gave you that double bottom. That is the price action pattern that I want you to always look out for. But make sure that you see the second bottom and you wait for some kind of candle confirmation like this hammer. If you pay attention to the second bottom here, you will see hammer here. Okay, if you look at this one, you see hammer, weak rejection. So this is what this tells you, is that when price got here, it got rejected. Like buyer stepped in. That was why it was pushed up. But the people that sold here, or the reason why the market sold here, there's still much there in the market. That is why you see second push. So when you see the second push and you see price still get defended at that particular zone, still get defended, then you want to be sure that this particular price level is holding and people are taking position of buying here. So that is why you want to consider taking at the second position. And another reason why you want to do that is that sometimes price may hit your stop loss. If you just look at, let's say for example, now after this retracement, you just decided that this is a Fibonacci golden zone. No, let me just put this. Okay, as you can see, let me put Fibonacci here. Okay, you can see price retrace to your 50 Fibonacci golden zone retracement, and you decided that, okay, let me take my buy position for the second leg, for the first retracement, and then you put your stop loss just below it. Okay, and you put your stop loss just below it. You can see price come back and then hit the stop loss and leave weak. Okay, so this is why it is actually important. One of the reasons why it is important to wait for this second move to happen before you take your position. That way you be on safer side and the price will just continue heading in your direction without any drawdown. Okay, you will discover that most of my trade, there is no drawdown. You can see the price, despite the fact that the market wasn't good here, the market still keep heading to my direction. Look at this one, the market just keep heading to my direction. Look at this one too, the market just keep heading to my direction straight. So there is no drawdown. Okay, that is because what is supposed to give you drawdown is the second bottom, and it has happened. Okay, so you want to look for that double bottom. As you can see here, double bottom here after that retracement. So if you look at the previous one too, if you look at this one after this bullish move, you can see the price came back and gave you that double bottom, and then came back again to form triple top, but it doesn't matter. And then this very first one would have been the best bottom. Okay, so from here you have your confirmation, so you can take your position, put your stop, take your entry here, put your stop loss just below it. So that is the price action pattern. So it's not only weak rejection. You also want to, if you don't see weak rejection, you want to wait for, what's it called, bullish engulfing candle. Okay, so and then again, it's not only double bottom that you want to look out for. Sometimes you want to look out for reverse head and shoulder pattern. It looks like this. It looks like this. Price go down, lower lows. You have lower lows, lower high. Then you have a failed low, and then you have something like this. This is the first shoulder head, second shoulder. So you want to be looking at this. If you want to buy in a bullish market, you want to be looking for this too. So something like that want to show up here, but it's not really. I will call this one double bottom. Actually, I will call this one double bottom. That is the first one. Then it comes down, then come here, then started leaving rejection, slightly rejection. As soon as I see body of the candle green, that was when I took an entry in this type of position. This is a double bottom. So let me see. Maybe I will still see a reverse head and shoulder pattern. This is, you can see double bottom too here. Okay, so that is the price action pattern that you want to always look out for, and you will see that you just continue to take trade, and you will make it big. So enough of that. So let's just leave that and move to the next rule. The next rule that I want to talk about is called maximizing your profit. So what do I mean by maximizing your profit? A lot of you, when you trade, you just want to target the next resistance. Now, the fact that you understand that this market is bullish market, okay, you see this resistance, for example, don't value it. Okay, I'm not saying you should not value it, but what you want to do is when price get to that particular point, you do not want to close your position. Just move your stop loss. Maybe now, for example, you can move your stop loss to this particular point. Okay, just move your stop loss to this particular point and keep holding. The reason is majority of the time when you are trading in the direction of the market, just like I showed you, I believe the first rule is trend identification. So when you are trading in the direction of the market, majority of the time is the also resistance will not hold, and then you just this market, you just do resistance, just like this. Now you can see the resistance break, so that way you can hold the trade for a long time and then maximize your profit taking. If you look at this trade now, you'll see this is a huge profit. Look at it compared to this SL. Okay, the SL may be bigger than this. I'm not the type of person that sets tiny stop loss, so I always try to give markets room to breathe. So look at the profit. Now this is on 4 hour. Imagine if it is on 30 minutes or your 1 hour. You will see this is crazy. And let me just put it on 1 hour. Even this one that I don't count as anything, you can see how crazy the trade is. You can see how huge it is. Look at this one that I just finished showing you. You can see the trade. This is not a regular trade that you see people capture. Okay, this is not a regular trade. So but if you are able to follow the rules that I'm laying down here, you'll be able to hold trade for this long and then capture this thing. So you want to hold trade and make sure that one trade like this, if you have been losing for like 10 back to back, even 10 times, one single trade can just wipe out that losses and you still make profit on it. Those are the kind of trade you want to make out with. You want to follow. Okay, so so my fourth rule is maximize your profit. Always hold your profit and trade it with your stop loss. Okay, if you look at other trades that I've taken in the past too, you see they are gigantic trades. They are not your regular setup that you see, regular trade that you see. Okay, look at this. This is on 1 hour. This on 1 hour. These are trade. It didn't even, this is a whole chart on the screen, a whole chart on the screen, and capture a whole chart on the screen. So that is the power of trading, of maximizing your profits. Okay, you want to maximize your profits. Okay, so that is the fourth rule. So the last rule here is setting stop loss. You see, I always see people that we open 5 positions, let's say S&P 500, and they will open 5 positions, 10 positions at once. If you are open 10 positions, you know you have to set stop loss for each and every position. But I continue to ask myself, instead of you opening 5 positions at 5 positions, why don't you just, let's say you are using 0.01 micro lot, 0.01 micro lot size for one position. Instead of you using instead of you opening 5 positions with that same lot size, why don't you just use 0.05 instead of 0.01 and open one position? So that way you can just set your stop loss for that one position. Okay, you just set your stop loss for that one position. But in a situation whereby you use one standard lot, for example, and you open 10 position, that is 10 standard lots. Okay, you will now have to set stop loss for each and every one of them. And the funny thing is that a lot of people that open position like that don't set stop loss for those positions, so they just leave it and let it run and manually close position. Anything can happen in the market. You can just hear news that war has broken out in between 2 countries, and then that particular asset can just drop straight away and wipe out all your profit. So make sure that instead of you open multiple position, let's say you want to open a trade of one, you want to open a trade of 10 lot size, and then you now open one, you now use one lot size and you open 10 positions. Instead of doing that, just open one position with 10 lots and set your stop loss for that single trade and keep managing that trade. Managing trade, what I mean by that is that you look at it and you follow what's going on out there, and then you pay attention to it and you move it, and you understand that that single position can earn you a bigger money within, even if it is just that single trade you capture for that 1 month, you are good to go. So that is the last rule that I want to give you. I believe this is helpful. Don't forget to like and subscribe, and if you want to join my mentorship class, click the link in my bio. You will see my Telegram and my IG link there. Just send me a DM. I will get in touch with you. So bye bye, see you again.